Hi, everyone. Welcome. We are about to get started on our finance and financial planning section of the course curriculum, which can be a little bit intimidating. And I just am here to tell you, don't be worried. Math is an important part of business. It's important that we stay on top of our finances and our bookkeeping, but don't let that scare you. Let's keep it simple and try to get that nervousness that a lot of people have about math and budgeting and accounting out of our heads and just approach this really in a simple, straightforward way. And I really truly believe that that's the key to being successful in keeping on top of your business budgets and your math, the dreaded math. So let's go ahead and start. We're going to dive right into the chapter, and this section is financial planning, and we're going to learn a lot of different things in this particular lecture. We're going to talk about the importance of financial planning and finances and bookkeeping. We'll talk a little bit about small business taxes, pricing your products, and how that relates to the profitability of your business. And we're going to work on internal business operations systems, policies, procedures, making sure that we have it all set up right so that we can always have a good, clear picture of what our business looks like. And we're going to go over some of the financial statements, the balance sheet, the profit and loss statement, also called the income statement, the cash flow analysis, and the budget. And at the end of this section, you will prepare a budget for your current business. And we'll be using the sample that we've used in the last lectures of Joy from Home, which is, we'll go into that a little bit later, but it's a fictitious business that we've been using, a MEKHOs business, where we have somebody who's cooking from home and selling tamales. And then at the end, you'll earn a digital badge in financial planning. So some questions that I'd like you to think about as we get started in the financial planning workshop is, why is it so important for you to have good financials? And which reports do you think are the reports that you should have? And then I'd like you to ask yourself this question, and this is a question that I heard asked in a recent workshop from Jennifer Barnes, who is the CEO of a very successful accounting firm here in San Diego. And she asked, if you're making $50,000 a year in profit, but you're not paying yourself, is your business actually profitable? So what do you think about that? What do you think? And we'll get back to these questions or the answers to these questions as we go. So financial planning, it's one of the most important avenues to being a successful business owner. Whether your business is a food service business, a tech business, even if it's a nonprofit business, the business still needs to make money. It still needs to be profitable, and having good financial planning and financial systems in place helps you to show that you are successful, profitable, and that your business is on the right track. And if it's not, it helps you to see it early by having those reports made, the systems in place, and having a good system yourself that you are comfortable with, that you are that you're good at, so that you can recognize problems before they become big problems. It also helps you decide which products and service and markets are profitable. It helps you decide what you can afford in terms of teams or store or location or purchases of inventory or getting more employees or spending some more money on marketing or purchasing new equipment. It helps, it gives you tools for your future so that you can adjust your direction when you need to, and it helps you find your way through those challenging times. So I often hear people say to me, Tanya, I know I'm not good at financial planning. I know I'm not good at bookkeeping and marketing and this, that, or the other. And so I'm just going to hire somebody else to do it. And I'm here to tell you, it's fine to hire other people. I encourage you to hire people who are experts in the field to help, but that does not give you a pass to not understand it and to not have the systems created by you in place. You need to understand the basics of financial planning, and you need to be the one who's doing that financial planning, because ultimately that keeps you out of trouble. It keeps you honest. It keeps the people that work for you honest. And it's really what you do as the owner, the CEO, the director of the business, is make those decisions. When you give those decisions to somebody else, you're losing a lot of what makes your business, and then they get to decide how your money is spent, and they're the ones who know how much money there is. So you really do need to understand the basics. You need to know what's happening with the financial health of your business if you want to have a successful business. So what financial planning actually is, it's a summary of the financial health of your business. It involves reviewing your revenue, the money coming in, the turnover, your assets, your capital inventory. So the money that you have, the things that you have that have value, and anything else that has to do with your financial affairs. By reviewing this information, it gives you a good idea of how your business is performing financially, and it also outlines your financial goals for the future. So I wanted to I think I'm going to just really quickly pull up the assignment for the end of this section, just so that you have a good idea of what you're going to be doing and some of the things that we're going to be talking about as we're going through them. So you'll be creating a budget proposal or just a budget for your business. And as we're going through and talking about the different reports in the chapter, I just wanted you to understand that it doesn't necessarily matter that you are doing every single every single system that you're using is exactly the way that an accountant would do it, or that you're using one particular report or another. Yes, it's important to know these common reports, but what's more important is that the system works for you. So if you have a way that you like to do things and that works for you, the system works for you. I'm not here to tell you that you have to do it my way, or do it one certain way only, or only use one certain program for your bookkeeping, or I want you to understand that the most important thing is that you just have a clear picture of what your business owns and what your business owes, and all the way down to the cost and the profit that you'll get for every single item of food that you sell, every single service that you provide, the one unit. So to do this, we gave you a template that you can use here for a budget. And if you click right there on that link there, it'll take you to that budget template. And you can see there's lots of different tabs at the bottom. The very first one is the actual budget template that we're going to ask you to be doing. And I'll get more into details later, but I just kind of wanted to show you, we also have that sample that we're using of that case study of Joy from Home. So this information is all here, and we'll go more into detail later, but I just kind of wanted to give you a picture of what we're going to be doing for that assignment there. Okay, back to the core of what we're talking about here, the financial planning. So you can use that template to keep an eye on your budget and your financial health, or you can use other tools that you so choose. As long as you have that good, clear picture of your business health, that's the most important thing. So the financial planning process involves first collecting the data, setting goals, looking at the current analysis of your business, and then you're going to actually write a draft plan of where you want to be, what products you're going to be providing, the services that you're going to be providing. Then you execute and actually implement that plan, and then you review that plan. And the important thing to understand in this process is that it's a repetitive, iterative process, meaning that you do it again and again and again. So each of the different steps of that planning process provide new data for you to then create new plans, then execute the plans, and then again, follow up, monitor, solve any problems that you found, and do it again and again and again. So it's not a static process. It's a process that goes on and on and on and on. And so when you're doing this, you want to make sure that you have very clear goals that help you with your planning. Now, goals are projections, right? Projections of what we think we can do, but we don't always know. So a lot of business is guessing, but it's educated guessing. And the way that we do good educated guessing is that we are very careful about the way that we set our goals. We make our goals specific and narrow enough so that we can actually plan effectively. We make them measurable so that there's an outcome that we can see whether we were successful or not successful. Attainable, so we don't do pie in the sky goals, goals that we can actually attain in a certain time frame. Relevant, meaning that they have to be helping us to get to those long-term objectives. And then time-based, and I kind of alluded to this before, there have to be realistic times, end dates for achieving those goals. And so it's important that you set both long-term and short-term goals for yourself and your business. Now, long-term goals, we say 5 years and above, 5 to 10 years. Short-term goals are goals that we can achieve typically within a year time frame is ideal, but definitely under a 5-year time frame. So it's important that you understand your financial situation and have a clear oversight of your financial health. With that oversight, you'll know what resources that you have available, what areas of business are doing well, and what areas need improvement. And once you know that, you can identify what capital you need to help you plan your finances more effectively and maximize your resources. So when you're completing that budget assignment, part of that is identifying what capital you need to reach the goals that you have, and then you can start looking at sources of capital, and you can see, can I realistically get this? So I want a lot of people to understand something that a lot of people don't understand, and that is that if you are starting a brand new business, you will likely not get a grant or a loan for that brand new business. There needs to be some sort of we need to see some sort of history of success. Banks don't fund dreams, unfortunately. It's very rare that you'll even get a grant to start a business without some verifiable financial reports that you can show to a bank to then or to a grantor to get that money. So it's really rare that you ever see something like this Get Cooking grant that's going on right now, where you'll get money without having financials. But it's important to know, though, that even though, it's amazing, it's wonderful that it's happening, you do need to keep very good, clear financial records for moving forward, for when you are ready to maybe take out a loan or bring on an investor or other ways of obtaining money. So your financial planning can help you to actually grow your business by having a very a good, clear, workable plan. You can identify areas of growth, and you can prove to people that your business is successful and is the way that you say that it is. And it shows you areas that you can improve, and it shows others areas that you're successful in. So you need to make sure that you're as careful as possible at spending your money as efficiently as possible. Never, even big businesses are very careful about every penny that they spend, because they know that no matter how much money you have and how much money you make, you need to spend your money as efficiently as possible, and you need to know what everything costs. So I just want to quickly share a little story with you so that you can understand the importance of financial planning as a business owner, especially in the food business, in the food industry. So there's so many stories I could share. In the food industry, we know that the margins of profit are razor thin. There's not a lot of money in food, and you need to keep your actual food costs down to a very small amount as possible, so that you can actually make money. The rule of thumb is about a third. So no more than about a third of the cost of any food item should actually be food, should be direct costs associated with the food production. And at that level, especially here in San Diego, it's still even difficult to make a business profitable with that small of a food cost. And it's really important that you know the cost for every single item of food that you produce if you are in this particular industry. So I worked with a business a few years ago. I was actually helping a family member with their business, and it was a bakery, and also they made sandwiches for lunch for people. And they had one sandwich that was really, really popular. It was beautiful. It was a lobster BLT with a lobster bisque, and it was delicious. Amazing cooks in that business. But when we were actually looking at the numbers of the business, when I went in to help them with their financial planning, they didn't know how much that sandwich cost them to make. They weren't sure. And which is scary, which is very scary, because how do you know then how much to charge and when and if you're profitable? So it's really, really critical that you know these things. And when we talk about pricing, we'll go more into that story and what actually happened with that company. And it's important to think not just in the short term for each item, but it's also important to think about the long term. It's the perfect way to think about think about the growth of your business, and you can create a step-by-step plan to get where you are now to where you want to be with good financial planning. It's also critically important that you have funds set aside for rainy days. So most bankers and financial planners say that you should have about 3 to 6 months, 3 to 6 times your monthly expenses, or 3 to 6 months in an emergency fund to see you through the tough times. Now, for me, I think, my goodness, I'm always thinking month to month, how do I get through? Very often, it's you can do it with less, but it costs you more money if you don't have the money to cover, unforeseen events. It costs you more money in the long run when you can't take advantages of economies of scale, or you can't weather the hard times. So it's really important that as you're going through and building your business, that you don't grow too fast. You manage your growth. Don't try to maximize it. As you're starting to bring in money and make money, be very careful about keeping as much reserve funds on hand as you can. Ideally, 3 to 6 months that you can keep the business going without any profit for those 3 to 6 months. And there are many resources to help you along the way with loans, with gap financing, with support. And here are a couple of them here. Also, you can see the Small Business Development Corp. There's also another organization that I'd like to tell you about too, and that is the Small Business the SBA, the Small Business Administration. They're wonderful to help you with the planning, with your financial documents, and they'd be happy to take a look at your reports for free. Also, SCORE is another great organization. It's the Society for what is it? Can't remember what it stands for. The Service Corps. No, it's Service Corps of Retired Executives and Entrepreneurs. And they have mentors who can help you and look at some of the financial documents as well. Okay, so we're going to stop this lecture here, and then we'll move on to the next section.